Hey traders, Raghi here. Well, we've made it to the end of the week, and sadly, I say sadly, because I really anticipated by the end of the week we would have had the stimulus bill already signed, not Friday end of the day, and that we would have had some time to see the midday rip or midweek rip higher into a number of markets that we could have sold into. So it looks like it's going to get rolled into next week. And I've got to be straight up with you all. I am hoping that we're not done seeing the rally, that there might be something over the weekend or even something on Monday that the market might get all jubilant about and rally one more time and give us a post-stimulus rally into the 21 exponential moving average, the 21 EMA prop dot, these green dots on the ES. Here's the NQ. Again, I'm looking for some strength into, it would be the 21 EMA prop dots as well as the 34 exponential moving average on the low, the red line of the wave. Again, I need something into about 78.50, 78.45. By the way, the number for the S&P would be about 2646 to 2697. And that actually reminds me of something I want to do here. And that is starting next week, and those of you that are following on the alerts, maybe not in the chat room during the week, or maybe you have select days you can be in the chat, but you follow the alerts. So what I'm showing you here is the new format that we are going to go to in the alerts. So if you see an alert from David or Neil or myself, of a specific entry, we might have a note, we might have an explainer, but at some point within that alert, we might have different levels we're telling you to look at or different readings of this, that, and the other thing. But at some point, a line that looks like this is going to appear. And that line is the specific order that we're looking to get filled. So for example, had we rallied into the close, or even if we rally on Monday, my order was going to be something along the lines of this. Sell the ESM20. What is that? The S&P June contract for the year of 2020 at the price level of 2646 on a limit, and then in parentheses to open. Now, this pretty much mimics the format that you would see on Thinkorswim. When you pull up a Thinkorswim order, it's pretty much going to look like this. But the truth of the matter is, whether you're trading through Thinkorswim, a TradeStation, Infinity, whoever it is, this is pretty much a very common way to communicate an order. I want to sell the contract at a price, on a limit, or on a stop, whatever it is. And then we'll have opening orders and we'll have closing orders. So what we're hoping is this sort of now homogenized, very simple order is going to hit your phone or hit the alert section of our room, and then you have a very succinct plan, meaning sell this at this price to open, buy this at this price to close, or vice versa. I believe that we'll still have a lot of notes accompanying them. Like, for example, not everyone's going to go trade the underlying S&P if and when this happens. I realize that. And that's fine. I don't know that it's appropriate for everybody from a risk standpoint. But I also want you to know that that entry is based on the 21 exponential prop dot, and that it's one of two levels that I would look at. And if you wanted to trade the ES or the SPY, those two price levels would be price triggers to buy, in turn, the at-the-money put for the May or June expiration of the SPY or the June expiration for the ES. Right? So I'll put in a little bit more detail in the notes. But the one thing that every one of those ideas would have in common is everything is coming from that singular sell ESM20 at 2646, or even I could put a sell ESM20 at 2697, limit to open, right? So that's the formatting that we're going to see going into next week. And even when I do the day trades, it'll be the same thing. When I'm putting in a day trade at a particular level, I'll let you know I'm going to sell, but the day trade alerts, like for example, the day trade alerts will start off with day trade and then sell, whatever it is, NQM20, at whatever the price may be, etc. Okay, so let's say we were shorting, 77.40, right? It would be limit, and then I would have to open. And when we have our closing order, for example, it would be, in this case, buy NQ M20. And let's say we're taking our profit on that 77.40 short. And I want to take profit at, call it 77.05, right? That would be actually a limit. Okay, buy a limit. And that would be a to close. Now, I might have something like to close 50%, right? That I would then put in the note, because I don't ever say get flat. I'll say note, scale out of 50%, or I'm scaling out of 50% of my position. So that is not to close the entire trade. I'll let you know in the notes, scale out. All right. Or I might even say to close, we'll see how that's going to go. But in the notes, make sure that you read the order, but then you also look at the notes for some of the nuance. And that's the way we'll be doing things as of next week. So my alerts will look like David's alerts, and we'll have different notes, but this will help you, I hope, be able to make these more actionable, quicker, and with less learning curve, right? With less of a learning curve to understand, Rod, do you want me to buy or sell it? What is the trade? And you'll have it right there in front of you. Okay. All right. So that is going to happen next week, and we're pretty stoked about that. Now, I'm sure over time our notes will, evolve to address the confusion points for the orders, but this is good old-fashioned basic order entry. There's nothing really from a learning curve standpoint to have to, I don't want to do that. From a learning curve to really have to decode. This is just good old-fashioned order entry. Now, let me mention something. Some of you might say, okay, Rog, but I'm not really that up to date on order entry. Okay, no problem. Limit orders, by the way, are or better orders. And typically if you're looking for a level to be retested, or you want to buy into weakness, as I like to do, or sell into support, buy into weakness or sell into resistance or sell into strength, the limit order is what you're going to see, right? Stop orders are basically market orders with a price trigger. And they're usually best for momentum through resistance or momentum through support. So if you're looking for a certain threshold, like a ceiling to be broken, and you want to get long, that would be a stop order. If you're looking for a floor to hold and you want to buy into it, that would be a limit order. All right. And then stop loss orders are really just stop orders. So stop loss is just really a stop order that just happens to be getting you out of a market. Okay. All right. So, we'll talk a lot more about that stuff, but let's discuss a little bit more about what I'm looking for next week. So ES and NQ, very close to levels that I think one more rip higher, we should be able to get that fill. In the meanwhile, what will I do? The same thing we did all week. Until I get that fill on that daily time frame, I will continue to day trade. And a lot of you have noticed this week we've had a very, very good day trading week. Productive, consistent, following our process. Today, I did not have my process. I didn't abandon it. I just didn't have the process in place. Meaning I did not have the clarity in the yen that I wanted to sync up with a short sell in the broader averages. And that yen strength was actually even at odds with something that we were pretty positive was going to happen today, which was the signing of the stimulus bill, which we knew could trigger a little bit of strength. And it did, until it didn't. Some of you will notice it's almost like the yen took its revenge on the market, meaning the yen was strong, pretty strong all day long. It was really strong earlier in the morning, and it waned a little bit, but it never became weak. It just wasn't the strongest currency. And it's almost like the yen was just heckling us. Well, not us, because we weren't in the market, But it's almost like heckling, saying, look, we told you. Look at that sell-off into the close. We told you there was yen strength. So if you're wondering, Rog, if the equities markets are strong and the yen is also strong, what are you going to trade? And I'll tell you what I'll trade. I'll trade the yen strength. I'll go look at either the Forex, the futures, and I'll go day trade the yen. I will not normally say, well, I know the yen is at odds with being long the equities markets. I'll go ahead and be long the equities markets. I think the equity markets were chopped higher for the most part, but not clearly, not cleanly. Some nice V-score bounces, as many of you have noted, right, for sure, right? But it's a tricky thing to want to defy the yen. It's a tricky thing. And I think a lot of folks found out very quickly how difficult that can be when the yen's saying risk off, risk aversion, be short. Again, the disconnect keeps me out of the indices and it has me focus on what the yen is doing. And in the free video, I talked about Canadian dollar versus Japanese yen. And again, for those of you that are wondering, Rog, what did you do today? Not much at all. Otherwise, I would send it out as an alert. So the disconnect alone was enough for me to say, A, we've had a really good productive week, and B, why screw it up on a Friday? Okay? And so we chose not to. But isn't it interesting that by the end of the day, we pretty much got down to nearly the lows of the day? Isn't that interesting? In all pretty much one fell swoop. And you can see that on both markets. A few other questions folks had for me is, Rog, what about the crude oil market? Until Russia, meaning OPEC Plus and the Saudis, OPEC, want to come to the table, crude oil is not only in an oil price war environment, which I think at some point is clearly going to come to an end, but even without the oil price war, now we have the coronavirus affecting traffic, air traffic, ground traffic. And we already were anticipating 2020 would be a year of less energy demand, less crude oil demand. And then you've got the coronavirus on top of all of this, and it's really crushing oil demand. I mean, just crushing it. So a lot of folks ask me, Rog, do you expect 20 to be broken? I do expect 20 to be broken. And if I can get a bounce in crude to the 13 aggressively, but the 21 exponential, I will look to short it. Heck, even this Darvis level around $28.50 right here would be terrific. So bounces can be shorted. And same goes for RBOB. And in many ways, I think RBOB is going to be even weaker than crude because all this cheap crude is flooding the market and is being peddled to the refineries. So the refineries are cranking out some, all the products that you would make with crude. Gas being one of them, right? Diesel being another. So even more so, I feel comfortable shorting RBOB. This is the New York Harbor Blend Stock. This is basically unleaded gas, right? So I'd be just as content shorting RBOB. I think that if anything, I feel more comfortable shorting RBOB than crude. All right. Now you might say, well, what about the summer driving season rally? Gang, this is an entirely different environment. Yes, the seasonal is there, but as long as we're in this very intense coronavirus environment, we're not driving anywhere. So summer driving season rally, not this year. Okay. Let's short the rallies, which is a very different conversation we were having in a pre-coronavirus world. All right. What about gold? Gang, ultimately, I would rather, if someone told me, okay, Rog, you're stuck in gold, you want to be stuck long or short, and I can't be fussy about price. Long or short right now, long, easily, okay? So we don't have such limitations. We can be long and short from where we want to be. Top of the range is 1,700 in gold. Bottom of the range is about 1,480. The closer we are to 1,700, I can opportunistically, nimbly, and short term be long puts or short gold. The closer we get to 1,550, the closer we get to 1,480, the more I feel comfortable building a long position in gold, preferably with further dated out GLD or GC call options. I will alert next time we do this. On the flip side is copper. So as much as I want to be long gold, I am still 100% content shorting copper into strength. I was looking for a little bit more strength than what we got. In other words, when the equity markets were rallying, one thing everyone should have noticed, and here's something to keep note of. when the equity markets rally without copper and without crude, it's a rally for some reason. It could be because the Federal Reserve is injecting again billions of dollars into the equities, not equities, into the system, liquidity, right? Mostly buying treasuries and mortgage-backed securities, etc. But they're supporting the economy. That doesn't mean the economy is expanding, growing, or even healthy, for that matter. And crude and copper are very clear about what's happening in this economy. And this is pre-coronavirus. Okay? The movement lower in crude, that was January. We broke down with those red grab candles here. Okay? And so what does a contracting or slowing economy mean? Less demand for crude, less demand for copper. So those are the two canaries, both to the up or down side. If this market is really going to stage a rally, a V-bottom, a comeback, it better take crude and copper with it. All right? And it was very interesting to me when people say, how can you be so sure, Rog, that this isn't a V-bottom? And I say, copper isn't telling me so. Right? And the last thing I'll leave you guys with, and this is really not trading analysis, but just something to think about in terms of where we are in this battle with coronavirus, and just how pessimistic still I am about the equities markets because of this. This is a shot of my hometown beach, if you will. This is Fort Lauderdale. For those of you that are familiar, this is the segment of Fort Lauderdale between Sunrise Boulevard and 17th Street. That is really the bulk of Fort Lauderdale Beach. It's a multi-mile beach, okay? And all these little dots you see here, well, these were this snapshot is taken during spring break. Okay, that was the beach at spring break, and all those little dots are cell phones. All right, so all these folks come and congregate. They come here, congregate, party, whatever, and then they go home. This is during the coronavirus, gang. Spring break was just about a week or so ago. Take a look at that. That's where they went. So those same dots that I just showed you here, that's where they are now. Where do you think the next outbreaks are going to be? Look at the hot spots. They're all the hot spots we're seeing now, right? Not accounting for all of them, but this is it. So when folks ask me, Rog, kind of are we on the tail end of this? And I say, no, we haven't begun to see the kind of numbers we're going to see. We haven't begun to see the kind of initial claims we're going to see next week. All right, we're not there yet. And I feel confident that we're probably going to see lower lows. Copper is one reason. This is another. Okay, these are the kind of things that I look at. So if you're looking at something, look at the data, kind of play it out to a logical conclusion. I think there are shorts to be had. Okay, I just need some more rips higher to short into it. Okay, long week. I know a lot of you, like myself, we're grateful that we know how to trade, that we have this wonderful skill and ability. And so kudos to you for learning, for knowing that even when all these kind of things are happening, they're horrible, we can still sit down, look at the markets, and as I like to say, take money out of thin air. It's a heck of a feeling. All right, gang, I'll see you in the next update.